Hi, and welcome to the CostofCarry podcast. My name is James G, and thank you all for tuning in. Let's get started. Protecting our clients. As brokers, are we always acting in the best interests of our clients when they come for a loan? And for the most part, the answer is yes. However, let me clarify by saying best interest doesn't always mean rate. This may come as a bit of a surprise to some customers out there and individual borrowers, but sometimes rate, you may not realize this, but the rate is not always the most important thing for you. And let me further clarify that by saying each lender has a different policy for how they design a loan product. So for example, in commercial lending, there is something called a GSA, or a General Security Agreement. And what that means is that the lender has a right, if it's signed, to take recourse over the business by liquidating its assets. For most borrowers, that is not something that they want to take on, simply because if they are looking to ensure that they are looking to also do some additional lending in a different space, a GSA can be quite restrictive in what can come after this potential lend settles. And in some cases, a GSA may bring on a cheaper rate, but that cheaper rate comes at the expense of the GSA and the preventative measures that follow that. And lender B, for example, may, for this same deal, may have a slightly more expensive rate, but it doesn't have a GSA. And so that's why lender B will be more appealing than lender A. I think following this regulatory review and Royal Commission that the industry has come out of in recent times, best interest has demonstrated itself to be in that regard, where it's not all about price and it's more about suitability. And sometimes the role of a broker is to explain to the customer why products are more suitable to them compared to others. And that's part of the reason why we provide so many alternatives to borrowers about what's available, to explain to them, okay, well, option A, B, and C are all here on the table as well. But if we look at option D ticks more of your boxes than all the other ones, but as you can see, the price is slightly higher because of the fact that it ticks more of your boxes. And that makes sense, because when it comes to assessing a client's needs and objectives, what we're actually trying to do is understand why they want to do a loan or why they need financing. And if we can't find a product that suits all of their needs, or if we find lots of examples that nearly fulfill all the needs, then that's when it becomes a matter of understanding, well, what would be best for my client if I was in that position as well, or if it was my money that I was considering. Would I want to put this all on the line just for a couple of basis points cheaper rate, or am I prepared to spend a little bit more in order to get it exactly how I want it? And so that's something that has been discussed a lot lately. And I think for the most part, brokers' clients are protected by the broker. And I think that's also because brokers want to ensure that that relationship isn't ruined by anything that has been overlooked or has been done negligently. Personal loans. Why would someone need a personal loan? One of the reasons that I see personal loans being needed for is for debt consolidations. Now, debt consolidations can arise from a multitude of things, but one of the most common ones is credit cards. Plastic is cheap. I've heard some people have 3 or 4 credit cards to their name, and especially you like using cards for points, and you use your credit cards to pay for things before you have the money. This is where this personal lending solution can come in handy, because it allows you to clear debts and create credit. So while you're not necessarily paying any of it down, you are refinancing it at a cheaper rate, if that makes sense. So credit card debt can be anywhere up, it can be anywhere around 20%. However, if you're able to consolidate that debt against something in your property, for example, or maybe it's unsecured, obviously it depends a lot on the profile of the borrower in that case, or the person who holds all the credit obligations. But if you're looking to consolidate your debts, or you're looking to do a small renovation in your house, that can also be done through a personal loan. If you're looking to take a holiday, that can be done through a personal loan. If you're looking to plan for a wedding, that can be done through a personal loan. So things that relate to, or predominantly relate to, the lifestyle of a borrower, they can be catered for through personal loans. And given that they can satisfy some of the criteria of anti-money laundering and counter-terrorism financing, this is relatively straightforward. And while it may not be a cheap solution, it does provide a timely service, with most lenders being able to hand out the funds within 48 hours of the application being received. And I think this is a nice complementary service that the broker can offer to his or her residential mortgage clients if they do need anything quick, or quick access to money. Because although you can do a loan, so like a 20k equity release in your mortgage, that does take time, whereas a 20k personal loan can be done, as I mentioned before, within 48 hours. So that's where one may consider a personal loan. Now, what are some examples of commercial lending? And this is interesting because commercial lending is very broad. It is definitely not as in the box as a residential mortgage, but the thing with commercial lending is that lenders need to be satisfied by the business purpose of the scenario. Of course, you can still have your purchase, refinances, equity releases, and things like that. But if you can demonstrate the business nature of what you're doing, that's where it becomes both a little bit more complex. And then on top of that, if we're also dealing with group structures as well as silent partners or directors, shareholdings, things like that, we've got trust somewhere in the picture as well. That's where it can get a little bit more complicated, and that's why the broker is there to assist in being able to paint the picture of what's actually going on. It isn't always about trying to get the cheapest rate in this case, as it may be evident in the residential space. Sometimes borrowers don't fit the profiles that lenders are looking for, and this can be an issue, obviously, if we're trying to get a house. With businesses, the thing is that lending is often what's required in order to generate additional income. So for example, if you are a business that is looking for a new warehouse to purchase because you've outgrown your current one, and purchasing this new warehouse is required in order to take on new staff and new jobs and bring in new machinery to offer more services, then that's why commercial lending is necessary. It does have a role. Now, some examples of commercial lending are construction. So for example, if you're in the business of construction and you need to build apartments, or you're looking to build office spaces, commercial lending can be a solution for you, simply because there is history and evidence of your prior work, and this can really make the difference between making a deal or breaking a deal. And sometimes in these types of projects, getting it done is just as important as getting the right pricing for it. So that's something for developers to consider. Similarly, if you're a company director, having access to funds is important in the event that you need to buy additional stock, or you need to set up a new office, or you need to be prepared in order to acquire a new product type. So in R&D, for example, having that type of firepower available is important to ensuring the success of your business. Similarly, asset and equipment finance for businesses that are involved in transport, excavation, yellow goods. This is something to consider as well. And while asset and equipment finance is its own component for this discussion, we'll also say it falls under the commercial space, because if you are a business and you are looking for asset and equipment finance, in most cases you're also looking for a commercial lend as well, because you'll need somewhere to put all these assets that you've just purchased. So while you may have them on the work site, once the job is over, they may need to come back to your premises in order to get checked and cleaned before going out to the next job. And so the two go hand in hand, and they are important. Machinery isn't cheap by any means. Just look at the costs of trucks, for example. They can easily cost over $400,000. Similarly, yellow good excavators or diggers can cost anywhere around between $60,000 and $100,000. Most businesses don't have that type of money available at all times, and having a financing option available so that when the customer comes to the broker and says, hey, I need money for this type of project for my business, the broker is able to immediately say, yes, I have lenders on my panel that look at this type of commercial stuff. Let me follow this up and I'll get back to you. And that's the type of response that people want to hear, especially when they do require some assistance in that space. And on that note, that concludes this episode of the Cost of Carry podcast. Thank you all for tuning in, and I look forward to seeing you in the next episode.